Okay, how about one last interruption before we wrap up? So, how do you simplify everything that you've just learned? Well, you should review what's working and use those metrics to select your assets. Then start with more assets than you want and narrow down your choices. From there, you want to optimize your portfolio and maintain your risk aversion levels. And then you should check back every 2 to 8 weeks and rebalance as needed. Now, I hope that you've enjoyed these videos and these questions and that they've helped to reinforce the messages that we're trying to share. Getting into some additional resources, I'm not going to read off each of these, but these are some of the things that triggered my interest in investments and over time helped inspire me to develop a deeper understanding of the market and how to research things better. Certainly, when it comes to doing research of your own, I'd encourage you to follow whatever piques your interest, whether that's a book, a documentary, or even just a movie for entertainment purposes that can help inspire you and develop a different understanding of some of these concepts. One of them you might not think of is the Jim Carrey movie Fun with Dick and Jane. And while this is sort of a parody of what happened to Enron, speaking of Enron, it's important to understand their story. And if you want to know more about what happened to Enron, there's a documentary out there called The Smartest Guys in the Room. And the story just demonstrates that people will try to get away with all sorts of different things. So it's a lesson that you really need to monitor what your investments are doing. And if nothing else, you want to read their annual reports. They publish them once a year, and if you only have 10 investments, that means you only have to read through 10 reports per year. And you can just read the highlights, but at least flip through it so you understand what the corporation is doing. Now, from a book perspective, if you're trying to gain some insights into the global economy, Travels of a T-Shirt in a Global Economy is a good one. Going through an MBA program, they have you read that one because it helps you understand global trade dynamics and everything that's going into making a basic T-shirt. It also helps to reinforce global concepts and the standpoint that if we learn to collaborate and work together, we can accomplish some wonderful things. Then there are a lot of periodicals that are out there and different newspapers that are still available. Anymore, some of these organizations might have some type of political bias or a little bit of an agenda behind how they write their stories or which stories they choose to highlight. But if you want to get good investment information, where the vast majority of what they're talking about is just investments, investment performance, and politics only from the perspective of how some of those decisions are going to interact with the market, then let me know when you find that. Certainly, there are different organizations that are out there that offer different perspectives and cover everything pretty well, but don't be afraid to get your news from a variety of different sources. There's also social media, and a lot of corporations publish major announcements directly to their social media accounts. By following them on certain platforms, that will help you keep up with what's going on and help you better anticipate their stock price movements. The one that surprised me the most is LinkedIn, but it makes sense since employers are out there trying to find new employees and will want to brag about their latest achievements. You might not be a member of LinkedIn, but if you're going to invest, it can be a great resource. You can also follow all sorts of C-level people that are running your investments and even some of the board members. So from a news perspective, it's actually a really wonderful resource to help you keep up with your investments. All right, just to recap everything that we've covered, in Portfolios 100, we walked you through the basics and introduced you to the concepts like asset analysis and portfolio construction. Then in Portfolios 200, we went more in depth into the trading fundamentals and the math behind these concepts. In Portfolios 300, we covered financial statements, cash flow evaluations, and talked a little bit about stock ownership. Then in Portfolios 400, we discussed investment strategy and reviewed the performance of the different metrics. In Portfolios 500, we wanted to give you an introduction into economics so that you can better understand the market and how different factors impact stock returns. Then with Portfolios 600, this lesson was all about getting started and covering some of the basics of trading and actually interacting with the market and its major players. However, when you combine these courses with our technology, they help you develop a much deeper understanding of the investment world, and they leave you with more confidence when managing your investments. Try to continue to broaden your understanding of investments. There's always something new to learn, and it's a very dynamic environment. Now, certainly we appreciate your time and attention going through all of these lessons, And as we continue to grow, we'll keep you posted on any new developments. We're going to continue to update our testing results and enhance our sites as we find better and more relevant ways to share this information with you. For now, we'd advise you to check out our technology if you haven't already and start practicing to manage your portfolio. The more you practice, the more it will help you avoid certain pitfalls later on. One last time, I wanted to put this in front of you just to reiterate what we're coaching here. Hopefully at this point, you've got an idea of what strategies you want to use and started to find some assets that you think will suit that. As you're adding assets to your portfolio, don't be afraid to add a few extra just to see how everything reacts and what kind of grades you get. From there, you can narrow down your choices to the number you'd like to invest in and then find your optimal portfolio so you know how to balance everything out. Now, don't forget to apply risk aversion as well and distribute your total investment between risky and risk-free portfolios. Then, depending on your strategy, you'll want to check back at least every 2 weeks and assess if you want to change anything. Now, whenever you do go to make changes, whether that be buying more or selling off one of the stocks that you have, or maybe it's just to rebalance to a new optimal portfolio using the same stocks. Whatever your motivation, you always want to weigh your decisions with any tax implications, and that's one of the main reasons why it's always a good idea to consult with a financial professional before making any moves. So keep in mind, while we are helping to show you how to manage everything, we're constantly encouraging you to work with financial professionals before making investments or before making any changes to your current investments. Hopefully these lessons can act like a compass and guide you on your investment journey. Just keep in mind these lessons are here to educate you, not tell you what to invest in. That's for you to decide, and for each of you, the answer of what to invest in and how will be different. So I'll just leave you with this last piece of advice: to never stop learning, to never quit on your investments, and no matter where you're at in life, you always have the power to improve your situation and to make it better. We will all fail at some point, but it'll only define you if you don't get back up and if you don't keep fighting. So don't give up. I'll leave you with one of my favorite Thomas Edison quotes. There's a way to do it better. Find it. Thank you for watching our Portfolio Degree training lessons. This completes our video instruction. For more information and additional content, be sure to check out portfoliodegree.com. I'm Matt Franklin. Thank you for being here. God bless you and best of luck.